It's been a mixed picture here in Asia, and I think if you look at the ASX 200, once again we've seen the outperformance really driven by the banks, not necessarily driven as a pre-positioning ahead of the Federal Reserve meeting, but I think probably the valuation argument has stacked up after a 10% move to the downside in the financial sector. You know, the fully franked gross or even the net yield on the banks is very, very attractive in this period of low volatility. We have same can't necessarily be said for Asian markets or broader Asian markets where we've seen Chinese markets under a little bit of pressure. There has been a lot of data that came out of China today. Retail sales coming in at 10.7%. That was expected. You saw the industrial production numbers coming out at 6.5%. You know, that was a good number, slightly above expectations, and the fixed asset investment numbers, you know, were pretty impressive as well. But we have seen the Chinese equity market under a bit of pressure there. So, you know, perhaps they weren't as high as expected. Perhaps they were slightly better in the vein that perhaps people, you know, expect to see more tightening coming through in the Chinese economy going forward. But certainly the Chinese equity market under a bit of pressure today. We saw a bit of a pop on those numbers in the Aussie dollar, but that's been faded fairly quickly today. If you have a look at Japanese markets, pretty flat on the session as well. And I think the commodity story has been an interesting one today. We've been seeing good selling of iron ore futures. They're looking very heavy at the moment. The spot price is under all sorts of pressure. But we are seeing buying coming from mining stocks, and I think that's different. So equity up, the underlying commodity under a bit of pressure at the moment. So that's a trade that's definitely worth watching at the moment.